regards to ESG, what recommendations would you make for firms when they're looking at how they tackle it? What recommendations do you make for them to look at? Right, these would be the areas to look at. This would be the space. This is where we start.
Yeah, I mean, I think for starters, you need to evaluate what level of organizational support you have for the cause. I mean, if this is something you want to do in a silo in a business unit, it may not get the level of traction that it would require. So usually the clientele that we serve is at the utmost leadership levels and sometimes even at the board level. So think of, board chairs, CEOs, CFOs, COOs, these are people who are driving organizational strategy. So for starters, it's this concept of making sure that you've got that level of buy-in. Number two is, I think, trying to find some quick wins, things that will show up in your scorecard that you can demonstrate have driven better organizational outcomes, whether it's financial or non-financial. And then, lastly is making sure that you create some level of cadence for benchmarking, because what you don't measure, you can't evaluate. And so if you have the ability to see trend lines between how your company is performing, first, initially, I think that has value, that holds mustard. But then even better is over time being able to evaluate some of those metrics to the outside. Could be a private equity group that's similarly specialized in healthcare, or it could be a private equity group that's similarly specialized in consumers. However you might want to evaluate that, whoever you view as your peers, there's a lot of value in doing that benchmarking exercise.
Okay, that makes sense. And then driving into that, looking at we would talk about the kind of KPI world. Is there any kind of examples of areas that you would suggest that they look at on the KPI side? Is there, look, these are, top three, or, here's one for an example perspective?
Yeah, I think that's a good question. We spent a lot of time when we were developing our business around, what are the ESG essentials, for lack of a better term. So whether you're a healthcare company or you're a consumer products company or anything in between, what are the things that every organization, regardless of sector, needs to focus on? And I think by no surprise, number one is probably climate change. Number two is likely diversity and inclusion. It's showing up in every types of businesses. And then I think there's also, an interest around certain like energy usage and efficiency. And I think those, because most organizations have some type of facility or office footprint. So whether you're a large scale employer or a small scale employer, I think all those things matter.
And I think it's an interesting one, because we talk about ESG both in the portfolio side and how, making sustainable type investments and everything else that goes with that. But also, I think, as we look at, we're both on the same side of the table as a private equity firm. We are a services business. We are not making and producing something. We have a group of collective individuals that offer, from a private equity perspective, acquisitional and then growth and development of businesses and through to exit. We're actually producing something. So I think sometimes it can be difficult. And I was on a recent kind of L&D type focused webinar recently, and one of my key questions was, I run an office. How do I make an impact? We've got a recycling bin for consideration from there. But looking at the actual private equity firms themselves, what recommendations would you make for them to kind of tick more of the boxes in an office environment? Or, equally, what has RSM done to kind of tick that off for you guys personally?
Yeah, I mean, right now there's, very, very high unemployment within the U.S. And so I think for starters, private equity can shine very bright in terms of generating more jobs, based upon the capital that they're deploying. But then also to demonstrate that private equity investment drives economic development. And that could be by geography, that could be in certain sectors, or you name it. But, some of the myths around private equity in the past around, over leveraging companies to drive distributions out to LPs is really false, and it's grossly misleading. So I think, given where we are with this global health pandemic, I actually see private equity as being that lifeline for a lot of those portfolio companies that need help. And and just maybe they're able to shine a brighter light on this, the alternative investments asset class, knowing that they can spur a lot of jobs and spur a lot of economic development.
We do have a strong focus on ESG here as well, and part of that is diversity, equity, and inclusion. So we are the first sub $1 billion private equity firm in the industrial space to be a signatory to the principle of responsible investment. So that was a big accomplishment for us last year. We're holding ourselves accountable on the reporting front. We're putting in ESG KPIs across our portfolio, across our firm, as middle ground as well. We're focused, and part of that initiative is diversity, equity, inclusion. And that is both, again, across the portfolio company level and then at middle ground too. So bringing that diversity of perspectives from different backgrounds. So, a lot of our founders, do have different backgrounds, having come from manufacturing. We have one of our founding partners is a woman, Lauren Mulholland. You do not see that with a lot of private equity firms today, which especially in the industrial space, there are very few. So, those were a couple of the things that really led me to want to work with this founding team. And we've really continued that as we've built our team out over the years. I mean, I think I was employee 19. We're now at 46. So we've grown really fast, and the culture really does start from the top, and it's a huge focus of our founding team. And we've continued to build out and hire and recruit with that in mind. We're trying to get access to more diverse candidates who have different experiences, and we do that at the portfolio company level as well. So it's a huge initiative that we've undertaken. We've actually become a signatory to ILPA's Diversity in Action initiative, which is, again, another thing we're proud of and excited to be able to kind of report out on our metrics and be a thought leader in the space.
The results kind of show for themselves in a lot of aspects. You can try to do good and try to do good in all these different type of ESG related components and still turn profits and things. Also kind of, what kind of things are you investing into, what I mean? The people that you're going, in terms of maybe I'll start from a deal perspective here. From a deal perspective, we look at things around human capital, right? At a more heightened point, in terms of recruiting employees. What is your employee base? What is the satisfaction? How are you improving their communities? But then also, I think, one aspect I think that was maybe not as heavily, diligence is, we looked at the target, right? And just the target itself. We really didn't do as good a job in the past because it wasn't such a focus is, what is that target's impact around the community that it's in? How is it helping the community, right? Is it providing other job opportunities? Is it providing for career developments and things of that nature? There are many towns and cities across the world to this day, where one manufacturing plant really does support that particular town. You know what I mean? I would say, even over in the pond here, I've been to Sheffield 4 or 5 times now. And in Sheffield, I mean, without some of those factories there, I don't know if Sheffield, would be as thrivant as it is today.
Absolutely.
So there are definitely, concerns, that you need to diligence. For me, I think, from a diligence perspective, what we have done, it was that we have prioritized. And like I said before, these are questions that we've asked before, but they were toward the tail end, right? We've reversed the orders of a number of these things. I gave you the example about the supply chain. We do a little more diligence on supply chain stuff. But one of the things that, this was told to me yesterday on a call yesterday, and I think it was so apropos. She mentioned a commercial, maybe it came out 4 or 5 years ago, and it's a bunch of people that have their head stuck in the sand. And all of a sudden, this new type of product comes out, and everybody lifts their head out of the sand, and they all just kind of start running towards that goal, and then they fall off a cliff. Okay. So, I'm forgetting I think it was Athena. It's Athena commercial. That's kind of where we are right now. Just to give a real blunt kind of, response to this is that there have been firms, private equity firms, that have been out there doing this for 10 to 15 years. You could have called it something different, social responsibility, climate responsibility, and now we've kind of packaged it up into, this very misnomer ESG, but one of the things that we do not have is, by way of example, we've now started to see, and especially in the UK and in Europe, in your side of the pond over there, an earlier adoption of inserting ESG metrics into credit agreements, right? So if you meet some of these 3 criteria, and I'll just give you by way of example without any referencing client names, if you have, X% of females and minorities that serve on your board, if you have X amount of people that have been engaged in certain programs, to further their development, things of that nature. If you achieve all these things, then you'll get basically half a point cut here, 500 basis points one way or another, and we're starting to see that a lot more. I think when talking to my UK colleagues about 12 to 18 months ago, it was really kind of the big large cap people that did that and what the metrics are. But you're now seeing it move down to the middle market on the lending space in the UK and Europe.